Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers as we discuss mortgage rates plummeting just in time for the Federal Reserve to meet to jack them back up again. And so the real question is how much longer will they stay this low, and will they continue to get low? And what does a 0.5 point decrease in mortgage rates, how does that really impact the housing market? You guys are going to find that out today when we go over amortization schedules, comparing refinancing and selling and looking at that interest. Now, on top of that, you guys, we're also going to have a response to the video that Melody Wright and Adam Taggart did a couple days ago that got picked up by Newsweek because Melody Wright basically shared her hypothesis and stated that in some markets, home prices can go down nearly 50%. That got misquoted and made it appear that she said that that was going to happen in 2026. And so the real estate thugs and data provider shills came out to bully her. Our ending segment is going to be an update on her writing to the Texas Supreme Court on Mitch's battle to abolish property taxes. And having said that, you guys hold on because it's going to be a bumpy ride. Starting with the 10-year Treasury, you're going to note that this is not under 4%. It's 4.02%. And yet FHA mortgage rates are now under 6%. That's demonstrating to us that the spread is actually decreasing, meaning we don't have to be under 4% on the 10-year Treasury to see mortgage rates under 6%. Regardless, as of the making this video, the 30-year fixed rate mortgages are at 5.82%. Conventional, which is on the upper left, is at 6.2%. There's a grace period for the inquiry that's ran to run your credit to qualify you for a mortgage. And having said all of that, you should, not a guarantee, you should be able to get interest rates a 0.5 point under what you see on your screen. So people with great credit that are shopping, that are well qualified, should be able to get conventional mortgages at 5.75, probably, and FHA mortgages near 5.25% right now. Again, if you know how to shop your mortgage. Here's our comparison. And as always, you guys can find these slides on our Facebook page and our X page where I upload these slides directly. This is going to do two things. It's going to allow us to compare purchasing a home, and it's going to allow us to compare refinancing a home, because there is a heck of a lot of people that are trying to refinance their homes when they shouldn't. Now, as far as the refinancing, we're going to do a 3-year comparison, comparing 6.5 to 6%. But taking a pause real quick, if we just talk about purchasing a home, interest rates going from 6.5 to 6% when we're looking at a loan amount of $350,000, the payment only goes down $108. So the payment is still about $1,000 higher than it was in 2019, but you get a little bit of relief of about $108, as you guys see here on the bottom. Now, I want you guys to do me a favor, comment below. Is saving $100 a month, and we're not counting about property taxes going up, HOA going up, homeowners insurance going up, which is expected to go up 16% this year. Certain counties' property taxes have gone up 50% this year, but we're just talking about mortgage. We're just talking about interest. Saving $108 a month on interest, would that cause you to run back into the housing market? Comment below and let us know why or why not. When we look at the refinances, okay, on the left side is an amortization schedule at 6.5%. On the right side is an amortization schedule at 6%. So if we say on the left side, these people purchased in 2022 and they got an interest rate at 6.5%, that means that this family on the left side has been paying their home for 3 years. So the comparison, again, is the 3-year comparison. If they've been paying this loan for 3 years at $350,000 at a 6.5% interest rate, that means that they paid this amount of money in interest. You guys see the amortization schedule here, which totals $67,000 in just interest. So 3 years, $67,000 in just interest. However, the loan amount only goes down to $337,000. Now, if we refinance that, because a lot of people purchased based on the concept that they would be able to refinance in the future to lower their payment, not looking or caring about the interest, that would give us a new loan amount of the same. It would actually be higher. So after 3 years, if you refinance and you pay the average of a 4% cost, okay, so you see here, original loan amount, $337,460, which is the lowered loan amount after paying for 3 years, plus a 4% cost because it costs money. Don't forget the bankers, the commission, the fees, they all get paid off of your bad decisions. So a 4% cost based on that loan amount would be a little less than $14,000 at $13,498. So when you add that together, it gives us a new loan amount that exceeds the old loan amount. So again, if you refinance, not only are you starting all the way over again, odds are your loan amount is going to be even higher. On the old loan, the total interest paid over 3 years is $67,000. So all we have to do is add that $67,000 to the new loan, which is right here. Here's the new loan amount of $350,958, 30-year at the lowered interest rate of 6%. Now you can see on the upper right, the payment does go down. So the payment goes from $2,212 to $2,104, representing a decline of $108. But over the life of the loan, you pay $406,000. So when you take that $406,000 and you add that to the $67,000 that you've already paid, you now see the true cost of refinancing. The total cost, if you refinance from a 6.5% to 6%, is $473,642 in interest. You see that on the bottom right here. Now, if you kept the loan at the higher 6.5% rate and you just continue to pay it off, that would have cost you $446,405, which means you pay an extra $27,000 in interest to save $108 a month. And that is why you have to be extremely careful and look at the math and look at the amortization schedule when refinancing and purchasing homes. It is absolutely vital. If you just keep the original loan of $350,000 at the 6.5% interest rate, and all you're doing is, instead of refinancing, you're adding $200 a month towards principal. If you do that, instead of paying your loan off over 33 years, 3 years plus the 30-year new loan, you pay the loan off in 24 years. You save 9 years and $108,000 in interest. So instead of paying over $20,000 more in interest, you save $108,000 in interest. You guys, it is so important not to use your emotions when dealing with massive financial things such as refinancing and purchasing a home. Mitch, can you illuminate for the viewers how refinancing could possibly be a good thing, especially if you limit the term, so the amount of years that you're paying? But could you really also explain how most of the time refinancing is just making the bankers richer through commission, overtime, bonuses, fees, and things of that nature?
There's a slight correlation between Fed funds rate and a mortgage rate. So the market likes to believe that everything is pari passu, meaning even on an even scale, but it's not. So Fed funds, be it from the Federal Reserve, can be dropped. And as we have proven, and as we have shown on the charts, quite often the market will do the opposite. Fed funds rates may drop, but invariably then the interest rates go up, because the interest rates, mostly set by the banks, is called Wall Street Prime, is based on risk in the market. So if risk is going up due to inflation, due to defaults, due to all sorts of problems that we all know are out there, those risks have to be quantified and end up one way or the other in the form of the interest rates that you pay. So the problem with refinancing, you got to break it down and say, why do you want to refinance to begin with? If that particular family is wanting to refinance because they need the money to live on, because the real estate taxes, as an example, are too high, or because the cost of the food is too high, or because inflation on the overall operating expenses of the household is too high, refinancing is a disaster. It will lead to losing the house, because you're having to pay for that. And then they'll say, well, you don't have to lay any cash out of your pocket to do the refinancing. But let's just say, for sake of conversation, that that's $4,000 or $5,000 necessary to achieve the refinancing, and you roll that into the new financing. Well, all you've done is add on to the principal and add on to the interest, and you paid for the privilege of doing it. So you may get a little bit of money in your pocket, highly unlikely. And you may say, well, I'm saving a little bit of interest, highly unlikely, because when it goes out and you extend further in time, you're adding on to the cost, the original cost of the house. Refinancing isn't the issue. It's not the solution. The inflation is the problem. Everybody has to recognize what it is, right? It's the inflation, it's the fraud. Yeah. So if you're refinancing because of the inflation and the fraud, you're making your household situation worse. Not a good idea.
Sir. No, it's not a good idea, which brings us to our next segment, which is buying a house, which is generally not a good idea right now. It's pretty much guaranteed it's not a good idea right now, unless you know how to use the math instead of your emotion to sift through 100,000 listings and find one listing. If you know how to do that, one listing, that's a great deal. If you know how to do that, let us know. Let us know how you're doing out there. But this is an important segment, Mitch, because, and this is how I want to start this segment. I want to start by essentially acknowledging what everyone agrees on when it comes to the housing market, whether you're bullish or whether you're bearish. And I hate using those terms because bullish, bearish, I mean, on one hand, people are just saying, go buy no matter what, just go buy. You're stupid if you don't buy. On the other hand, what we're saying is if you're going to buy, first of all, probably don't buy right now. But if you are, it's very dangerous. Use the math, slow your roll. There's a bunch of people out there trying to take your money because they get rich off of your bad decisions. When you make good decisions, they don't make as much money. Always remember that. But the important thing that everyone could pretty much agree on without arguing is right now we have a housing market that from a median income standpoint is the highest priced it's ever been. From any median income standpoint, prices are the most out of control they've ever been, and pretty much the same thing with payments. Now, we've had some recent, as we just went over, some recent relief with payments, but historically, everything is still out of reach when compared to median household income. And so as a result of a lot of the inflation that is continuing and then burning off the consumer inflation of 2020, it's bifurcated the housing market and also new home construction and zoning laws. And so because the housing market is so bifurcated, it is so, and we've been covering this, it is so vital that you guys don't listen to mainstream data providers. You can't look at the housing market looking at macro data. The only way to really understand what is going on in the housing market and whether a price is down or not is by doing local analysis, looking what comps are selling for in that specific market. And let's just say a market is a subdivision. And so yesterday in that video, when Melody was talking about how home prices are going to go down because they need to get closer to median household income, she's absolutely right. A couple days ago, Adam Taggart with Thoughtful Money did a video with Melody Wright, home prices to drop in half from here? Question mark with Melody Wright. It was a great video. I really encourage you guys to subscribe to both of their channels. These are a couple good people. Newsweek actually picked up the video, made their own article titled Price Correction Worse Than 2008 Coming to a U.S. Housing Market. And I love it. I'm so proud of Melody. You guys have no idea how proud of her I am. And it's quoting Melody, this entire article. But what this did in turn, many of the housing data shills that get paid tons of money that are based on home prices and based on the housing market started bullying her. The first one here is Logan, which, by the way, I do have respect for Logan. Logan, I would love to do a video with you if you want me to come on Newsweek or whoever company you're working for this week. I would love to talk to you about the housing market respectfully, of course. But he's a bull. He's an absolute shill. He gets paid for doing this. He's saying doom porn sells, and he's responding to this post where they're slamming them for doing well on their video. Also, Mr. Goober, the Maltese lover himself, as you guys know, if you've been following my channel in the early days, this man used to make daily videos about me. He was so upset. This is just my opinion, and from what I witnessed, he was so upset. People started leaving his channel because they were so frustrated with him because he only talked about me. So Mr. Goober is now talking about Melody, and this is what he's saying. Doomers know how to play the media game. In 12 hours, a 50% housing crash call got 26,000 likes, nearly 6,000 shares. Nick at Reventure may no longer be the king doomer. PTSD from the global financial crisis have people thinking 2026 will be bigger and faster than 2008. And, you know, I'll have to be acknowledged, I went through the global financial crisis and I definitely got some PTSD from it. So yeah, I care about people enough to warn them and caution them, just like Melody. Mr. Goober went on and said, okay, enough is enough. No serious housing analysis would ever call a 50% crash in a single year. Clicks pay for rent. And again, you guys probably know he bashes, again, just my opinion, he bashes and belittles people that are renting. This guy, in my opinion, is an absolute shill. I say that because he's made several videos about how he's got filthy rich selling real estate and his courses on YouTube. So, massive shill. Mike Samosin also said, man, if you have the right message, the social media game is an entirely different universe. And then they're circling this post because obviously these guys are jealous. I figured the best way to respond to this is just go to my active MLS in Texas and see if I can find any homes at all that are nearly 50% under market value or under peak value in this year, the year of 2025. So I don't need to wait till 2026. I'm going to show you guys that you can actually find crazy deals right now if you know how to use the data and you stay away from these data providers that use macro data to push you to buy a house, and they belittle people that are saying the opposite of them. So I'm going to access this, and this is what I found. First of all, I am not saying the housing market is going down nominally nationwide 50% next year. I am not saying jump into the housing market, but what I am saying is through local analysis, I can find some communities right now that are massively under where they were at in peak. This particular one is an active listing, and this is in Paris, Texas, and Lamar County. This is northeast of Dallas. So I had to go, admittedly, I had to go far away from Houston because, again, I'm looking for 50% under peak. It's not the easiest to do that right now. The fireworks really haven't even gone off. But what I want you guys to note right now is how much is being sold price per square foot, $69.37. I also found a hotel that was being sold for $58 a square foot. I sent that to Mitch. Either way, $69.30 per square foot. This is an active listing. We don't have to get emotional. Let's just look at the data. The subdivision is the market unless it's rural or doesn't have a subdivision. So this subdivision is Highland Park. This home is trying to be sold, active in the market for 33 days, $69.37 a square foot. The size of the house is about 1,300 square feet. Here's a sold property. Okay, right here, you see it's sold property for $189,000. And what's that? $135. That was what it was listed for, $135 a square foot. It's almost the same size. It's a tad bigger at 1,400 square foot. Ours, again, is 1,300 square foot. It looks like the market in this subdivision actually peaked in 2024. So this was July of 2024. So when we take the $135 from the home that sold in 2024 and we reduce that by the $69.39 that this home is trying to be sold for. And by the way, you guys, if I'm going to buy the house, I'm going to get some more off. So maybe I would make an offer at like $75,000. So it's not really fair to compare this because the home hasn't sold yet and it's been on the market for an extended period of time. But nevertheless, you guys, that is a difference of $65.63 a square foot. So when we divide that in by the original higher price per square foot, that means that home prices have went down in this subdivision. When we compare this subject property to the comp that I just showed you, has gone down 48.6%. So I would say, yeah, that's nearly 50%. You gotta let the bulls just cry. And that's why they have essentially no views and most people don't like them, because they are never taking into consideration you and I and our median household income, and they can never fully respect the amount of inflation that has been and continues to be propping up the markets. But that doesn't work for very long. It's called Keynesian economics. Now, Mitch, what are your thoughts on all that? Do you think that those people are maybe not shills? Do you think that they're right? Do you think that Melody Wright is just a doomer and she's just saying these things? I mean, what is your whole take on all of this?
I believe in quantifying the data, and that helps understand exactly what's happening in all types of situations. So on my website, mockingbirdproperties.com/DCAD is the largest repository of evidence that we know of and that the courts have admitted that fraud has occurred. Well, you have people stating their feelings without any ability to quantify those opinions. Those people are doing harm to their viewers while simultaneously destroying their own credibility. You can't say on one hand, here's evidence, and we're not even going to talk about it because we don't know about it, which means they didn't do their job. Yet on the other hand, say that, well, under no circumstance are these property values going down. Doesn't matter whether it's 30, 40, or 50%. Doesn't matter. The point of the matter is look at what has happened. And to that point, do you realize that in the last 5 years, property values across the United States have gone up on average of 100%? To get back just to where we were 5 years ago means a 50% reduction in values. Well, how did that happen? That's all evidenced on mockingbirdproperties.com/DCAD. The answer is fraud, bond fraud, property tax fraud. The bonds themselves that have been raised are fraudulent. School districts are bankrupt. The reason the fraud occurred was to support the fraudulent school district bond fraud. So when you realize all these elements, somebody saying, well, the property values can't go down, go ahead and buy, I would premise that they are destroying their own credibility and putting their viewers in harm's way. As I've said dozens of times, nonstop, the only thing that matters is the median household income. It is the only denominator that is important to determine what a value of a property could be. No different than a commercial property. How much income is coming into that commercial property to support the value of the property? That's the only question on the table. I would suggest that the people who are saying, oh, everything's fine, jump into the water, are really bad at math and intellectually challenged.
Well, they're financial bias. I mean, I get it. Yeah, and I don't mean to pick on these people because I'm confident in what we have, because we have the math, we have each other, we have the data, we have years of research on all of this. The frustrating thing is the inflation. The frustrating thing is the constant betrayal, the constant propping up of the financial markets, the bank term funding program. They're not asking how. They're not asking how. They're just saying, here's the data. You're wrong, losers. Go buy my subscription. And that's how they're doing it. And that's it. Mitch, I want to go into our last segment, your most recent writing that you sent into the Texas Supreme Court. Can you pull that up now, Mitch? And can you kind of summarize what has happened recently in regards to abolishing property taxes in the great state of Texas?
I'm going to try to get through this fairly quickly, but we have a certain situation where courts choose to put form over function. And form, let's define that as forum, meaning the Supreme Court of Texas, and function, meaning the constitutional rights of you, every viewer, myself, and Travis, and every person in the United States of America. We all are entitled to and have constitutional rights. Without protection of those constitutional rights, you can be extorted by the government at will. So what separates us from Russia, China, or Canada for that matter? A Supreme Court denial of the judicial review of a lower court, and that is where we are at this very second, without explanation, I might want to point out, is not a precedent. The decision not to hear the case has no precedential value. The lower court's decision is only binding within its own geographic jurisdiction. I'm raising this point because other lawsuits can be spun in addition to the current lawsuits we have on the go for 24 and 25, but across the United States in the form of class action lawsuits. And more than likely, is where all this is headed. The issue here is that under no circumstance in Texas, based on the Supreme Court of Texas's own writing, their own doctrine in the Patel case, does the court, being the Supreme Court of Texas or the lower courts, have the right to deny constitutional rights of all Texans by denying the adjudication of a case where the lower courts themselves have admitted that fraud has occurred. So where are we? Well, either the law exists or it doesn't. We're about to find out. Last night, a document was submitted back to the Supreme Court, and it's very important. So that document, Travis can post it below this, is a motion for rehearing. And it is top dead center of my website, mockingbirdproperties.com/DCAD. Ryan Gentry drafted that with Matt Nowak from Nowak and Stouch. That's the document that was submitted back to the Supreme Court of Texas. So where are we? Not only is the equity in your home being stripped from you while you sleep, so are your constitutional rights. This should concern every property owner and every single citizen because you are paying for it regardless of what state you live in. As goes California and New York, so goes Texas. As goes Texas, so goes the United States of America. The disappearing doctrine, how Texas rewrote ultra vires and shielded constitutional overreach from judicial review. How do we know this? We caught them and documented every step in the process of how the property owners have been defrauded financially and simultaneously suffered the hidden repeal of their constitutional rights. The motion for rehearing makes the point that either the law exists to protect the citizens or it doesn't. The concept of ultra vires in Texas was established through legal precedent, particularly highlighted in the Texas Supreme Court case, City of El Paso versus Heinrich in 2009, which allowed lawsuits against government officials for actions taken beyond their legal authority. This doctrine serves as a narrow exception to the broader principle of sovereign immunity, enabling claims against officials acting outside their granted powers. Remember, on the website, we have all this evidence. The evidence isn't even debatable. It's irrefutable. It's video, audio, written documents, black letter of the law, not up for debate. The definition of ultra-virus is a Latin term meaning beyond the powers. It refers to actions taken by a corporation or government entity that exceed the legal authority granted to them. The opposite term, intra-virus, describes actions within the scope of their authority. So the context of ultra-virus can occur, and I'm going to move fairly quickly through this, can occur under corporate law. It can occur under administrative law, including the Administrative Procedures Act, which is federal. Texas has the same thing, Texas Procedures Act, which allows for judicial review of agency actions that are deemed ultra-virus. Ultra-virus can indeed be part of a process that is a constitutional issue, particularly when the actions by government bodies or government officials exceed the powers granted by the Constitution or statutes. While the ultra-virus primarily relates to the scope of authority in a corporate and administrative law, it also has significant constitutional implications when government actions exceed their legal limits. The Supreme Court of Texas denied the case to be heard with no explanation. We just simply don't want to hear this. Deja vu. Could it be that an intern did not understand the case and blocked it from moving forward? To be determined. However, let's examine the impact of this case not moving forward. The ramifications of the Supreme Court of Texas currently denying the case from being heard, meaning that ultra-virus can't be determined in law, then A, for what purpose does ultra-virus exist if it can't be determined in law and the courts don't want to hear the case? B, there is no law to protect the citizens, which invalidates the Texas Constitution under uniform and equal. If there is no law, then perhaps the approach by all property taxpayers should be, let's take a tax holiday for the next 12 months and force the school districts into bankruptcy, involuntary bankruptcy, and/or conservatorship. Because the truth is that the vast majority of the school districts that raise bonds are insolvent, as is the Texas Bond Guarantee Program, and have been using the contorted hiding behind ultra-virus as a method to cover up the necessity of the continued bond raises to pay for the compound cumulative interest on the outstanding bonds that are rolled out and interest rolled up instead of retiring the bonds, aka a Ponzi scheme, bond fraud, and accounting fraud. This is a very serious problem in that nobody with a brain cell would agree to accept no protections under the law and have to accept the predetermined budgets from a school district that has never seen a report on how much a property tax owner can afford, a school district that creates a wish list of money with no bids, no construction drawings, boosted operations with regard to operations and maintenance numbers, fraudulent interest sinking fund, and no publicly available evidence of how much in bonds is outstanding and how much in compound cumulative interest is outstanding, all of which is handed over to the chief appraiser at a central appraisal district who has zero capacity to determine what fraud was committed by the school superintendent and the school district boards. And then the chief appraisers accept that fraudulently predetermined budget after being told to hit the predetermined budget number, and then further expands and creates, and in brackets quoted, manipulates fraudulent property values outside the confines of uniform standards of professional appraisal practice, Texas Property Tax Code, Texas Education Act, and the Texas Constitution under uniform and equal, and the United States Constitution, not to mention a host of other state and federal laws, including RICO, that are also being violated. Yes, I know that's a compound sentence, but it's important. This is the definition of a criminal conspiracy to defraud, and the Attorney General, State Comptroller, State Auditor, and courts have sanctioned it. And right in the face of the very laws, the black letter of the law, as each one of those entities that I just stated has the obligation under law to prohibit the exact issues they created. The point being to all of this is stalling this problem off accomplishes nothing. It's simply a stall game while somebody's out looking for somebody else's money to cover off their fraud. The public must be made aware of these issues and start their own advocacy. Notify the judges that this is not acceptable. Demand your constitutional rights.
Mitch, very well said. And don't forget, you guys, that entire document is in the link in this description. Please take advantage of it. Please go check out our websites as well. We started redoing our websites to make it a lot easier to use to empower mom and pop. I have all the home buying stuff we went over today, how to do the market analysis, how to reduce the assessment value on your house, to reduce your property taxes, how to abolish property taxes, how to potentially join lawsuits, class actions. It's all there. Visit the links. Mitch, I really appreciate you. Melody Wright, if you're watching this, from the bottom of my heart, I'm so proud of you. Keep on going, girl. We're all proud of you. We love you. Thank you for everything that you're doing. And to the viewers, stay hopeful. I also love you. Please comment below, share this, and know that we are doing everything we can to empower you so that you can navigate one of the most toxic housing markets and economy in the history of mankind. Now, other than that, guys, if you're out there investing in real estate, you guys already know we wish you luck, and we hope you win.